Well, a very good morning to you all, ladies and gentlemen. And Miles, thank you very much for that generous introduction to this second panel session of today's conference. As Miles said, for those who don't know me, Chris Hayward, I'm the policy chairman and the political leader of the City of London Corporation, which effectively has the convening power responsibility to speak for the United Kingdom's financial and professional services sector, both to government but also globally as well. And I have the equally distinct pleasure and honour of being Deputy Chairman of TheCityUK as well. So, ladies and gentlemen, what an important topic TheCityUK have chosen for this panel session, because growth is, I would suggest, the defining challenge of our age. And I think in meeting it, we must enact the Chancellor, Rachel Reeves's formulation that if growth is the challenge, then investment is the solution. And by channeling money from savers into scale-up opportunities and infrastructure, we create a win-win dynamic, powering the UK's growth momentum and benefiting long-term savers with improved returns. So for us at the City of London Corporation, driving long-term domestic investment represents an absolute priority. Our recent work with the ABI, as well as the Pensions and Lifetime Savings Association, culminated in what you will probably have heard of, many of you, the landmark Mansion House Accord, which was a commitment by 17 pension companies to invest 10% of their defaults into private assets, with half in the United Kingdom. We think that's a very important initiative. And I think this, as well as other measures, open up lots of exciting possibilities. And everyone, from banks and building societies to insurers, pension companies, asset managers and fintechs, has an important role to play in this. So, just before turning to my panel and to the discussion, I'd just like to thank TheCityUK and Miles for organising this conference so brilliantly, as they always do, and indeed for their wider work in promoting the United Kingdom's financial and professional services sector. And in advocating for this strategically critical sector, Miles and the whole team, I think, at TheCityUK are championing Britain's prosperity at a really, really crucial time for our nation. So, returning to our conversation today, I'm delighted to be joined this morning by 4 FPS leaders who are each ideally placed to comment on how best to drive investment into infrastructure and UK growth sectors. Someone whose work brings him side by side with entrepreneurs and founders, the Managing Director and Head of Growth and Specialist Propositions in Barclays UK Business Banking Division, Abdul Qureshi. Good to have you with us, Abdul, this morning. Abdul, I should also add, very important to say this, is a member of the TheCityUK's Next Generation Leadership Council as well. Complementing the panel with a tech perspective, we're lucky to have Richard Davies, the Netcompany's Director and UK Managing Partner, to get that tech angle for us. And acting at the very heart of national efforts to support small and growth enterprises, I'm pleased to welcome Louis Taylor, the CEO at the British Business Bank. Louis, always good to see you. And finally, with a profound understanding of UK investors and the products and assets they back, it's fantastic to have with us our 4th panellist, Helen Hope, Mercer's UK Head of Investments. So each of you, members of the panel, are very well positioned to identify how we can mobilise UK capital and spur national growth and renewal in the infrastructure which will support it into the future. So let's start the conversation on the subject of UK institutional investors and pensions. And I'm going to start actually with Helen on this one. So what role do UK institutional investors have in supporting UK growth through business investment and investment in infrastructure? And how do you think the government's pension reforms might support that agenda?
So I wondered actually when I came today if I was going to get lynched for the fact that at the moment UK institutional investors aren't investing a great deal into UK investments. So I think maybe it's best for me to start off with why is that, and then we can then go on to how the reforms are going to help. Now, within the UK, and in particular within pension schemes, as you'll know, there's 2 types of pension schemes. There's the defined benefit pension schemes. Those pension schemes went through quite a hairy time on the back of the great financial crisis, And as a result of that, they had large deficits. And companies right across the UK have ploughed a lot of money into those. And as they've done that, those schemes have been de-risking. Now, they actually, where they are at the moment, they do have a lot invested in UK assets. They're just not as invested into infrastructure and other private assets. They're typically invested a lot into UK corporate bonds and also a lot into UK government bonds. So whilst they are providing investment to the UK, they're not providing it into those more growth areas. And how the reforms are going to help is that within the DB area, there's a big drive on consolidation. There is a lot of very small pots, and by combining those together, they have greater scale, and therefore they're able to invest in asset classes which have maybe been seen as alternative or a bit more niche. The other aspect which the reforms are really going to help with is, as I mentioned, DB pension schemes, corporates have put a lot of money into them, and they're now in a fabulous position where the majority of them are actually fully funded, so the assets are equal to the liabilities, and actually in a number of cases they have surpluses. And the pensions reforms are helping by allowing and making it easier for those surpluses to be accessed. And with that access, that means that money can either go to members who can then put it back into the economy and spend more, or it can go back into businesses, and back into businesses they can use it to invest, which is something that over the last decade they maybe haven't been able to do because they've been having to put that money in. Now, as we know, DB pension schemes, a number of corporates now don't offer that as their main pensions provision, and they offer defined contribution schemes. And those defined contribution schemes are growing significantly. But again, they're quite disparate, and so again, the government is encouraging a lot of consolidation. There's also been a big industry focused on cost. We've talked about value for money, but really actually it has historically just meant cost. The pensions reforms are looking to reverse that to focus on value and outcomes for members. And that's something that we really welcome. And again, that's going to help support the Mansion House Accord, where we're putting money into private investments. Private investments typically outperform public investments. It's just that they can tend to be a bit more expensive, and that's been a real barrier within the defined contribution area. But by this focus on value and outcomes, that's going to really help.
Thank you, Helen, very much for your take. Abdul, what's your views on this?
So just to build on that, as Helen's rightly pointed out, we need to get money into this scale-up ecosystem. Now, if you take a step back, how is that going to help the UK build one of the best innovation economies? There's two things which need to happen. Firstly, as Helen's touched upon, we need to have bigger, more purposeful, more targeted funds. And secondly, we need to identify some of the highest value and highest potential startups and really get behind them in terms of getting them ready. So if you imagine, look at our universities, we have brilliant university ecosystems, some of the best research. Take life sciences as a sector in Cambridge. In the last 7-8 years, you probably have lost most of those unicorns to US. Yep. And so it's all about getting them early, getting the right support behind them. And as an example, at Barclays Eco Labs, we provide lots of mentorship. We give them the skills. So you might be a brilliant researcher, but you may not know how to set up a business, how to navigate all the bureaucracy, the tax and seed enterprise investment scheme, how to organize your cap table, how to get ready for investment. So it's a combination of both of those things. So some brilliant initiatives and momentum on the funding side has to be matched by identifying and really getting behind some of those highest potential startups.
Thank you very much. Richard?
Yeah, I mean, I think it's been touched on in one sense, but the other side of it, and just picking up what Abdul says, there needs to be much more visibility of some of these projects. So you can't just do it by investing alone. I think the government have a role to play here. Certainly on that side of it, in terms of, we hear a lot about tech, we hear a lot about AI, right? You hear it all the time, but you don't transform by digitizing forms. You have to fix the plumbing. And so I think there needs to be much more bolder initiatives about some of these very large digital infrastructure programs, because only then will the investment community get behind it. They can see it's more visible. They can see there's proper regulation to it. And I think those conditions need to take place for that investment to get unlocked. Otherwise, it's very difficult to know really what you're investing in. And certainly, you know, I work for a company that's digitized a lot of other countries. I think we are in danger of getting left behind a bit here, because other governments are working very much in partnership with the private sector to encourage the sort of things that you've said. So I think those conditions need to exist, and I think procurement generally needs to change to encourage some of that wonderful talent we have in the tech sector. At the moment, it's really difficult for those companies to bid for any contracts, and it tends to go to the usual suspects. And this all comes together to suppress growth.
So thanks, guys, very much. Let me move this on to another question now. It's a very special one just for Louis, this one. So this is all eyes and ears are on you, this one, Louis. So how do public investment vehicles such as the British Business Bank complement private investment? And how does the British Business Bank support a pipeline of companies preparing them to go public?
Thanks, Chris. So look, just to really carry on from what has just been discussed, there's a wealth of opportunity in the UK that really isn't being recognised for the opportunity that it is, particularly by domestic institutions. And I think that part of the responsibility of the government, through its various financial institutions, ourselves, the British Business Bank, the National Wealth Fund, Innovate UK at an earlier stage, UK Export Finance as well, is to help to de-risk in some ways transactions that the private sector is finding difficult to digest. And by taking specific risks off the table or giving some kind of reassurance, we catalyse private money in, and there's a greater degree of comfort amongst private sector investors that this is an asset class actually that they really want to be in longer term. And so coming back to the British Business Bank particularly, the area we focus on is less infrastructure. It's much more the startup and scale-up universe in the UK, where, just to be very clear, I mean, we see unbelievable opportunity, to the point about great universities and great research that Abdul made, unquestionably out there, and we just are missing the gold mine that we're sitting on, and actually it's US VC houses who are taking that. And so the British Business Bank is there we're the largest investor in venture and growth equity funds in the UK, and go figure how you feel about that in the context of a free market economy, that it's a government organisation that's the biggest investor in venture capital and growth companies. But what we're trying to do is catalyse private money in there. Historically, we've put a slice of money into funds and tried to magnetise private money alongside. The National Wealth Fund operates in a similar way on infrastructure projects as well. But what we're now trying to do is a little bit more. So just this week, the industrial strategy was announced, and the government has announced we've got £4 billion over the next few years to invest in these scale-up companies, to back innovation in the UK, and to crowd private money in at a ratio ideally of 3 to 1 into the opportunities that we find. And it's not that we start from a bad place in the UK. We are bigger in this area. Our venture capital industry is bigger than Germany, France, and Sweden combined. But we could be so much better. And the opportunity for pension savers and others is kind of being missed. And, you know, most pension managers today won't be there in 30 years' time to explain to pensioners why they missed out on AI, for example. And we're there to try and address that and make sure that we invest in our companies, because they are the growth companies of the next 10, 20, 30 years. And we have to safeguard the future of the economy in that way. We're all saving into our pension schemes, but it won't be that great to have a retirement income in an economy that is denuded of any activity and is not employing our children and grandchildren. And so there is a kind of an intergenerational compact here, but around a range of opportunities that are commercially intensely attractive, and it's government's role and the institution's role to catalyse that.
Thanks, Lee, very much. Anyone else got a view on that at the panel? Abdul, yeah?
So if I may just build on that, completely agree. And just to give Louis and team some credit, if you take one opportunity, the gender imbalance in funding in startups, you know, we know female founders attract unfortunately, a very small proportion of that VC money. And the work that Louis and others and across the industry are all doing together with Invest in Women Task Force to really get money into those female startups. That's just one small example of how the ecosystem can come together to really collaborate and all the things that Louis has mentioned to really accelerate that. That in itself is a £250 billion opportunity.
Yeah, fantastic. Let's move on and talk a little bit about tech, if I can. Richard, looking at you here. So how can institutional investors and pension funds engage with delivering the digital infrastructure behind public services? And what policy changes do you think would help unlock more investment into scalable digital platforms?
Yeah, I mean, that's an excellent question in the sense that I still think digital infrastructure isn't treated in the same way as infrastructure. So, just to sort of put some clarity on that, if you don't have the plumbing upon which to build things, wealth creation, AI does not work unless your data works. We don't have a national policy around large digital infrastructure programs. Therefore, it's difficult for anyone to invest and build on top of things to create new wealth. So, give you an example, a country in Scandinavia, for instance, that has fixed the plumbing, you can set up a new business in 4 minutes. You go on to Department of Business and Trade website here, 4 days if you're lucky. And so the speed at which these things happen is slower. So I think there needs to be much more clarity on what the strategy is, because the private sector isn't going to invest in things it doesn't understand. And I think the reality is digital infrastructure is still not treated in the same way as large capital programs. And yet, one would argue, and I've spent a lot of time in the US in my career, there is a vast difference between the tech scene, early stage scenes in the US and here. And some of that is the encouragement to invest, because you can see the clarity of trajectory. And I think it's really important. And I'd like to see much more of that generally. And you won't be able to do that without government intervention at the moment, is my sense. And then you say, what needs to change? I think policy and delivery of all of this needs to come much closer together. At the moment, they're two parallel tracks. And what happens is, if those tracks aren't combined, as they are in many, many other countries, you get a divergence and you end up not delivering what it is that you've promised. And I don't have to probably tell this audience that there's some shining examples of that currently going on. And it just doesn't help anybody. So, I think this government I've dealt a lot with the new government, are much more optimistic already about the things they're doing versus the past in terms of enabling that. So I think if we can get that visibility of these large digital infrastructure programs, I would hope the private sector and pension funds and everybody else can then see just what the opportunities are.
Yeah.
At the moment, I just don't sense that's connected as much as it is.
Abdul, you wanted to come in on that again?
So I think just to give one example of that, where we focused, so take fixed broadband as an example. We are globally leading now because of all the investment and focus that's gone into that. But if you look at wireless connectivity, we are the bottom of G7. We're not even in the top 30 countries globally by many, many measures. Now, that's the critical part of the infrastructure if you're going to have adoption of AI and e-government as an example.
Yeah. Helen?
Yeah, can I just add a very small comment? I mean, you mentioned data. I think if there's any asset managers or wealth managers in this room, they will tell you that that is the number one issue.
Absolutely.
And it isn't just here in the UK, it's across the globe, and nobody has fixed it. So if the UK can be at the forefront of that, then that's going to be really powerful.
Yeah. But I would say, if you go and study other governments, if you go to Scandinavia, you go to Denmark, they have cracked it. They have one data registry across all the government departments. In Denmark, none of us in this room, if we lived in Denmark, receive one piece of paper from the government. You have your own personal portal and everything comes through it. Some smaller countries have done it. It's difficult when you're larger, but you're absolutely right. And AI, headline, AI is not in of itself that interesting. You have to have the data in a way that it can work. And that's why we still get paper so much from so many institutions. The legacy systems haven't really changed.
So let's move the conversation on. Helen, I'm coming to you now. We've heard from panelists about the role of our industry in supporting innovative businesses to scale up. What role do you see for our equity markets and specifically growth markets in achieving this, and how can we help to strengthen them?
Yeah, I mean, I think everybody knows that the UK equity market and the amount of companies which are listing there has been deteriorating. And in the 1990s, about 80% of the investors in the UK equity market were UK investors, and now that's only about 30%. So there has been a very lack of investment, and that's one of the reasons why has been some of the reasons I mentioned earlier in terms of defined benefit pension schemes de-risking, but there's also been some other aspects which haven't helped. For example, as was mentioned on the previous panel, the B word, Brexit, market uncertainty has certainly not helped. And also, one of the areas which has been a drawback has been stamp duty. Now, a number of other countries give incentives to the domestic market to invest. There is no incentives here at the moment, but there are things happening and changing. And there is the Pisces project, which I think is fantastic. So what that's going to do is it's going to encourage more institutional investors to invest in small private companies by creating a platform for them to be able to access them. It's moving, I think, into the sandbox stage. And it's that kind of investment which is going to mean that there's not going to be this sort of big barrier between the public equities and the private market, and it's going to try and help to break down some of those. And for example, with the Pisces platform, there's not going to be that stamp duty barrier. So I think what we really need is we need more incentives for institutional investors, not just here in the UK, but globally, to invest in UK equities.
Yeah, look, when I started my career at JP Morgan, corporate finance, I used to get out on the floor on the end of the day at the dealing floor and say, why would the market be down today? And the flip answer would be more sellers than buyers. But frankly, the issue is there have been more sellers than buyers in the UK public markets for the last 20 years, and hence the underperformance. And frankly, the only way to resolve this, both the public markets and the private markets, is to get institutional investors back into that market. And we need to create more liquidity in private markets as well as public markets. So I think it's an issue around liquidity for risk assets. And that's just going to take a bit of a change in attitude around risk appetite. We have, I think, consensus that we need to save more into our pension schemes, but I think also consensus that we need to invest more for growth than we have done historically. Now, how you do that is a different thing. You can do that through creating mechanisms for people actually to get into growth. Just by example, the British Business Bank at the moment, for the first time, is looking to raise third-party money from UK pension funds for us actively to invest in Series C+ tech and life sciences companies to get that asset class embedded into some pension schemes and even into workplace default pension schemes. Aegon UK announced publicly that they're working with us on this, and they will put their investment in their biggest workplace default DC pension scheme. And that's what we want, 1 to 2% allocation across every DC workplace default pension scheme into UK growth. But in terms of what would cause the UK institutions come back into the public markets, well, there was an article by Andrea Rossi of M&G in January in the Times, and I think it's not a particularly original idea, but the way he put it was that all of us, when we put money into a pension scheme, get a tax incentive. And for the government to say, look, for that tax incentive, we'd expect that money to be, to some extent, invested in the UK, and if it's not, well, thank you, we'll claw back that tax incentive. Fiscally positive for the Treasury both ways, either you're clawing back the tax benefit, or there's greater investment into the UK and greater economic growth. And I think, incentivization like that is quite important in all of this. So the last thing I'd say is that the capital markets are a continuum, and I always think of it like a clock with the cogs, where the teeth should all be meshing in balance and moving the thing on in proportion at different points of the function of the clock. And actually, we've stripped the teeth off quite a lot of the parts of our capital market because we're looking at everything in silos, and we need to have a systemic view again and make sure that we do put things back into balance, that private equity markets are functioning well enough to get companies to the stage where they might seek to be on a public market or to stay private longer and be able to do that and raise money as well.
Super. Why don't we just move on to another question? And Abdul, I'm going to start with you, and I'm going to ask the other members of the panel on this as well. So in a few weeks' time from now, the Chancellor will deliver her Mansion House speech in our City of London. And this will, in part, focus on the financial services growth and competitiveness strategy. So if you had one policy, you could choose one policy, what would you like to see included that would enable our industry to drive more investment into the growth sectors of the UK economy and the national infrastructure that we all rely on?
As you can imagine, that's a tough one to pick one. There's lots of opportunity, as we've all discussed. The one I would pick on, and maybe build on Louis' point, is how do we crowd investment into some of the best talent and the best company? So we mentioned equities market. The other side is, of course, the debt market. Now, if you look at financial institutions, and if I put my lending hat on, the underlying assets in the new tech innovation economy is intellectual property. And how do we get the risk-weighted asset framework? How do we get the broader ecosystem to recognize these assets? So this is the plumbing of the new innovation economy. How do we recognize it so we can get the right capital relief, the right structures into the banks to be able to then lend in turn? Of course, BBB play a big part in that today, but I think there is further opportunity there. So intellectual property, a national framework to make the UK the best place to register your intellectual property, the best place to raise money and finance against your intellectual property, will make a huge difference in the innovation economy opportunity. And if I may just add one example to that to bring it to life, climate tech. There is potentially based on various estimates and definitions, which can be a bit loose, but there could be a $60 trillion economic opportunity by 2050 in climate tech globally. Now, given what's happening globally at the moment, UK is in a unique position to build that industry and to be a global leader. And those are the sort of thing and big sort of institutional drive to get that to work.
Okay. Helen, what should be your one?
I want to see, and that's actually already in a lot of the recent guidance, but I want to see and ensure it's in there, skills and talent. And we touched on it a little bit, and actually we did as part of the previous panel, but I think that skills and talent is really important, especially in the areas of fintech. We've got a significant shortage there, and also in the area of diversity. And in some of the recent announcements that we've had as the precursor, and in terms of the consultation that came out, that is going to be a key thing as part of that. But in particular, I think one of the things where the UK's been missing has been in that fintech space. Everyone's moved to the US. They've seen the US is really the hub for that. But as we also know, there's also challenges at the moment in the US around diversity. And I'm hoping that with the amount that the UK's done on diversity, there's been a lot to promote that hopefully with that, we can help to try and bring the fintech back over here, encourage it with the diversity, bring in a broader range of talent, and use that to try and make the UK the fintech hub.
Great. Richard?
Yeah, I mean, my colleagues on the panel know a lot more about that side of the equation than I do, but I come back to my earlier point. There's a reason that people are moving to the US. And it's not just that it's the hub of fintech, it's because people can make more money, right? So I think whatever the Chancellor does, that visibility of this element, fintech, scale-ups, it needs to be much more visible to the investment communities. So they've got the confidence to invest in it. I think it's probably better understood as a community elsewhere. And yet we do have some of the things, the legal frameworks, we have some great tech talent, but it only goes so far and then it doesn't move on. And it needs that capital. So whatever the Chancellor can do to incentivize people and give that visibility of that sector, I think would be a very positive thing.
So I want to allow enough time for our audience to ask you questions, and also those people who are watching online. So I'm going to do one final question. This is to you, Louis. Another special one for you. In the recent spending review, the Chancellor announced that the British Business Bank's total financial capacity will be increased to £25.6 billion, which will enable a two-thirds increase in investments to around £2.5 billion per year. So given this huge increase, where do you see the bank's focus over the next 5 years?
Thanks, Chris. So, yep, good spending review settlement and really very focused on growth. The industrial strategy sets out 8 sectors that are seen by the government as having greater growth potential, and the money will be focused on those sectors. It's fair to say not those sectors each in isolation of the other. I could just say that straight away that advanced manufacturing and defence and tech and digital are all kind of one. So there'll be other combinations. But we will be focusing on that money on those sectors, particularly around scale-up capital. But what we want to do is what we have been doing, but at greater scale, at greater pace, and really trying to be genuinely catalytic to third-party money, to private sector money into these opportunities. And I think there's some new things that there will be in there. We have worked quite closely with the defence and security community on dual-use technologies, but I think we will focus a bit more on defence, and you'll want to understand why that might be. And that is a strong industry for the UK. I think we might work with corporates, the big primes, much more in corporate venturing, perhaps give them some backing to be able to do more of that, because the pull-through is very important. But the good news is that the government has also allocated us part of the money in order to be able to write bigger checks into bigger later stage rounds that we haven't been able to do before. So we've historically been to the point where we've been investing directly in companies rather than through funds. We put up to £15 million into, say, a £50 million round. We're now able to write checks up to £60 million into a £200 million round. An example would be Pragmatic Semiconductor, Cambridge spin-out company that has developed a way of making semiconductors on a flexible polymer substrate rather than rigid silicon, fraction of the cost, and they've got a fab plant that they just wanted to build up in Durham, which is now operating, but they raised 180 million for it. And getting UK money into that, really difficult, so we'll be able to write occasional checks for 50, 60 million pounds, which is going to be quite important.
Super. Well, look, thanks very much to my panel for all your answers. Now, we've got some questions already come in from those who are online, but I'd like to start with somebody in the room. So if you put your hand up, we'll get a microphone to you. Lady down here, should we take you first? Just tell us who you are, what your question is, and to which member of the panel in particular you'd like to direct it. And I'll try and get a few of them in the next 10 minutes.
My name's Wida Taff. I work for Financial World. Could I ask Richard Davies if he thinks the UK needs a sort of India stack?
I'm sorry, I didn't hear the last bit of the question. Sorry.
Does the UK need something analogous to India's stack?
I didn't get the last bit, I'm terribly sorry.
Sorry, the India stack approach.
The India stack approach?
Yeah.
Yeah. I wouldn't replicate that, but I just think there needs to be a lot more clarity about the direction, especially when we talk about digital infrastructure. I mean, you talk about other countries, and India, yeah, it's very much by design. I think we have an opportunity here to do much more by design. That is my view.
Okay, thank you very much.
And I would say, I think this government are on the right tracks, definitely, but it needs to go even more clarity and faster.
I'm just going to take an online question, and I'll take you over here, sir, as well. So this is a question from Jennifer Green, who's put in a couple of questions online. So any one of you can pick this up and run with it. But how much is finance the problem here, and how much is a NIMBY culture that has been enabled by a planning system that's become a barrier to growth? Who'd like to take that?
Well, I'll have a go at the first part for sure, and I can just give a personal opinion on the second. But look, we've got 7 trillion quid's worth of savings in the UK. There's 4 trillion odd in the pensions industry and 3 trillion in banks and other areas, and very little of it is invested in UK growth or UK infrastructure or in the future of our economy. And the issue is not the quantum of money that is around, it's all about allocation. That is the fundamental issue, I think. In terms of NIMBYism, well, I think the government has been pretty clear on their view on what is important for growth is inevitably important for the economy, and reforms of the planning system are necessary, which they're pushing through.
I'd probably just add to that I think it is the combination of both. We need the institutional investors to be investing, but we also need investments to invest in. And actually, one of the issues with the planning system is that it can take a while. Breaking that down, getting money invested quicker is certainly going to help the investors be more incentivised to put the money in.
Gentleman down here with the white shirt.
Hi, I'm Mercer from CityUK. You've talked a little bit about sort of the tax incentives that the government could make, but obviously in the autumn, I think everyone expects taxes to actually go up again. Some city analysts say by about £20 billion. I suppose out of all those tax rises that have been sort of floated, what is the most damaging tax rise that could be made to investors and the City of London? Thanks.
The most damaging tax rise. Who'd like to grasp that one?
I'm still reeling from NI, so...
Anyone else?
Look, I come back to what Andrea Rossi was saying, which is not to raise taxes, but to claw back a tax incentive that's otherwise given if it isn't used for a purpose that is conducive to growth in the UK, which actually would be a fiscally positive thing for the Treasury, as I said. Either they're clawing back the tax or they're driving more growth that'll generate more tax. But actually, it'll drive growth in the economy as well.
Okay, so Richard, here's one for you especially, okay? It's coming with your name on it, from Owen Thomas. So when it comes to digital infrastructure, it often remains invisible until it fails. Can you give us any examples of digital infrastructure that's had a measurable impact on public services or economic productivity, and how that kind of project could scale with institutional investment behind it?
Well, that's quite a question, isn't it? I think you can almost look at any facet. If you look at an airport, you look at tax, you look at benefits, all of them have benefited. So if you've got the right digital infrastructure, for instance, supporting your airports, because there isn't the physical space to expand, then there are airports that have got it right. They can put 10 million more passengers through a year without physically moving and laying any concrete. You know, that if you look at Heathrow, it is probably still, I think, the busiest customs point for the UK. So that would have if you can increase the capacity of Heathrow without moving it, then digital infrastructure helps that enormously. I think we've already talked about the last mile, the broadband, the wireless debates. I don't know if anyone's put a figure on that, but if you've got the plumbing in place, there'll be plenty of people who will build on top of that. And there's a reason why the US stock market is dominated by 7 companies. It's because the way that those companies do business is they provide the platforms and the whole ecosystem builds on them. If you think of that mental model, you could apply that to any aspect of the UK, whether that's government, transportation, and so on and so forth. But without that, you're not going to get the entrepreneurial communities building on that. And that's where real value creation is based. So I could point to numerous tax systems where people have ripped it up and started again. I could point to, I've already mentioned airlines. Any way you look, it's being provided for. And I think we've got a real opportunity to do that here. But and I agree with what Louis said, actually. From what I see, it isn't a question of money. It's a question of delivery, more than money. And you have to be organised to deliver.
Yeah, thank you. Any other questions from anyone in the room? If not, I'm going to ask one more then from our online audience. How can you expect the public to have faith in the pension system when they still can't view all their pensions in one place via the pensions dashboard? Who would like to answer that?
I'm not going to be able to answer the tech element of that. But I think that there, again, is a cultural issue that we've got around our pension system. You go to Australia, and it's not about your pension, it's your super. And people understand that it is a wealth accumulation plan. Most of us don't think about our pensions in the UK until you're my age and Chris's age. And we kind of ignore it. And it's not that we want everybody day trading, but we do want people to know what's in their pension. We do want them to be quite demanding of their managers about how they're, investing for growth and how they are, fixing the future that we all want in our retirements. So I think that attitudinal change is really quite important. And, we need to find a way to do that. And in the US, everybody talks about their 401k at a barbecue. We'll be talking about our house price, which is not a productive asset.
If I may just
Please, Abdul.
briefly build on that, I think it goes back to the discussion earlier. I think, Richard, you mentioned it earlier. I think this kind of underlines the opportunity around creating a national data connected ecosystem. That's a key enabler for a number of opportunities, be it NHS and better triaging and the 10-year plan, all the way into consolidating people's financial systems and the e-government opportunity.
Yep.
So there is a fundamental step change opportunity if we get the data infrastructure right.
Richard, you're nodding away there.
Well, I'm nodding because that's what I mean by plumbing.
Yeah.
If you have that pensions dashboard, what's going to happen next? To Louis' point, people do get excited about it, and people are creative, and then they do other things with that data and that knowledge. And so for me, that's just a great example of plumbing. As I say, in other countries, banks are now using the same portal as governments to interact with the citizen because the plumbing's in place. Helen,
the last word is yours.
Yeah, I'll just add a couple of points to that. I mean, pensions dashboard is obviously something that is very close to Mercer. It has taken a while, but it is coming. And I think within the pensions industry and with the reforms, we've spoken here very much about the finance, but there are also a number of other reforms which are looking to deal with the risk of inadequate pensions and also the risk that there isn't enough information for members about their pensions. So I know that it might feel that things have been slow, but there is a lot of support from both the government and also for the firms involved in order to both improve the advocacy and the information.
Thank you. Well, look, I'd like to thank all my wonderful panellists for what I think, and I hope you'll all agree, ladies and gentlemen, has been a fascinating and thought-provoking discussion. How we respond to the growth challenge could not matter more, I suggest, for this country. Its implications will be felt across this country now and for generations to come. And on the 15th of July, the Chancellor will set out the government's strategy for financial services at the Mansion House speech, and I'm confident that the right strategy will surely deliver for us the right investment. And today, I hope you agree, we've heard some exciting possibilities from our panellists here today. What is clear, overwhelmingly clear to me, is the need for action, tangible, concrete measures to support the highest growth sectors of our economy and expand economically catalytic infrastructure as well. And this country's economic and innovative potential is boundless. We know that. We just have to harness it. So now it's time to back that conviction with investment. Panellists, thank you for your contributions today. And to our audience, both here and online, thank you to you too. Thank you very much indeed.